Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, your essential rundown of the most important developments in crypto for the day ahead. I'm here to dissect Bitcoin's place in mainstream finance and explore if it's ready to replace gold or bonds as a safe haven asset. You may recall our U.S. Crypto News series last April, where we examined whether Bitcoin's digital gold narrative was breaking down as gold ascended to new highs while Bitcoin lagged. The idea of Bitcoin as a store of value has been gaining traction, but is it truly ready for the next step? Recently, the U.S. Treasury stated that primary use cases for Bitcoin seem to be a store of value, or digital gold, in a decentralized finance world. But what does this mean in practice? We reached out to Redstone, a leading cross-chain data oracle provider, to get their insights on whether Bitcoin can be a hedge for traditional markets. Marcin Kazmierczak, co-founder and COO of Redstone, shared some interesting findings from analyzing Bitcoin and S&P 500 data over the past 12 months. According to Kazmierczak, data supports Bitcoin's role as a portfolio diversifier. But when we dug deeper into his analysis, what did we find? It turns out that there have been periods where Bitcoin exhibited strong negative correlation with the American stock markets, especially during times of high market volatility. However, these correlations are not consistent enough to make Bitcoin a reliable counter-movement hedge. Kazmierczak explained that with correlations ranging from -0.2 to 0.4, Bitcoin demonstrates a variable relationship with equities rather than providing a consistent negative correlation needed for effective portfolio protection. This variability doesn't support positioning Bitcoin as a replacement for traditional hedges like gold or bonds. But here's the thing. Institutional players still view Bitcoin as a risk-on asset, which means it operates with periodic independence from traditional equity markets. This range of correlations is generally modest enough to provide portfolio diversification benefits, but it doesn't make Bitcoin a reliable safe haven asset. So what does this mean for the future of Bitcoin? Kazmierczak believes that if Bitcoin truly transitions to being treated as a safe haven risk-off asset, it would mark the most profound asset narrative transformation in modern financial history. But he's cautious about how quickly that might happen. The chart shows Bitcoin's performance has often diverged from traditional equity markets, especially during 2020-2025. However, this doesn't definitively indicate a permanent decoupling or consistent negative correlation with equities. Bitcoin outperformed at times, but it still shows periods of correlation with the S&P 500, indicating its role in portfolio protection remains uncertain and context-dependent. And as we all know, context is everything when it comes to Bitcoin's performance. So what can pass as context for these variations? Well, according to a recent U.S. Crypto News publication, political tension and concerns over the Federal Reserve's independence could be contributing factors. But regardless of the reasons behind Bitcoin's behavior, one thing is clear. Its role in mainstream finance remains uncertain. Is it ready to replace gold or bonds? That's still up for debate. At Bitcoin Bulletin, we're committed to providing you with unbiased, transparent reporting on all things crypto. Join our Telegram group for trading signals, a free trading course, and daily communication with crypto fans.